Back with markets at lunch right here on ET Now.
Okay, let's quickly tell you what the global markets are up to at lunch. And Asian markets have been up in trade post Federal Reserve's minutes raise market hopes of more monetary stimulus. But a weak reading from a survey of Chinese manufacturing activity trimmed gains. In fact, Chinese factory orders have slumped to a 9-month low in the month of August against expectations of a modest seasonal pickup.
European markets have also opened firm as fresh signs that the US Fed may launch new stimulus measures offset worries over the Eurozone debt crisis. In economic data, Germany's flash manufacturing PMI for the month of August came in at 45.1, its first rise since January. Eurozone PMI is largely stable, the same levels as we saw last month.
Day after the Fed minutes, US futures have been quoting higher following cues from Asia as well as Europe. Lots of important data points to watch out for: jobless claims, PMI manufacturing index flash, new home sales, home price index, as well as earnings from Goldfields, Hormel Foods, Big Lots and Salesforce.com.
Let's get a perspective then on global markets. Atif Latif joins in from Guardian Stock Brokers. Atif, thanks for chatting with us. Before we talk about hopes of stimulus driving the rally, I want to get your quick comments on the Eurozone composite PMI data that's just flashing. It's coming at 46.6 against a forecast of 46.5, so largely in line with street estimates?
Yeah, morning. The data we had this morning was more or less in line. No real surprises there. And this rally we're seeing at the moment is really just based on expectations coming through from the US that there will be, some sort of stimulus package coming through in September.
Atif, what about the Chinese data that we're currently seeing? And again, concerns heightened about a slowdown in China.
Yeah, well, we've seen the PMI now below 50 for the first time this year, and the issue now we have is how quickly will they react to it to try and maybe add some more stimulus into the market. But the slide we're watching quite closely is, it's fine saying that they will add some stimulus, but the concern is that there are policy constraint factors that we have to take into account, such as food prices and property prices, which will continue to sort of erode investor confidence. But coupled with that, we do expect them to move relatively soon, if not in days, then weeks.
Atif, what's the word on the street? Are market participants now beginning to wonder if this rally has more steam, because we've seen a fair amount of run-up in European equities on the back of stimulus hopes?
Yeah, we have. We've in the last 7 weeks we've rallied nearly 600-700 points. Initially on pretty substantial volume, and over the last 2-3 weeks the volume has slowly died down. So that does suggest that we're probably close to the top end, barring any more news coming through from the US or China. Should more news come out, the people that have been recently taking profits and selling will definitely come back into the market and start buying.
Atif Latif, we'll leave it at that. Thanks for joining me with that perspective on global equities. Let's shift focus to commodities then, and they've also been pretty much spiking in trade. We've got a commodities editor, Manisha Gupta, joining us with a quick update as always. Manisha, it's all about gold, and I can see you're wearing yellow.
Well, absolutely, yes, Sandeep. Every day this week we have seen further gains coming in commodities, especially for the gold prices. Today is the 7th straight day when you have seen the gains coming in for that one, and the 2nd straight day of record highs in the Indian markets as well. We quite clearly have reached the 30,600 mark on the higher side in the futures market, while the spot markets are trading around 30,800 in Mumbai especially. The support, of course, is coming in from the global markets, where the gold prices are nearly $10 up right now. That's a 16-week high for that one as well. And the weak data from China, US and Europe does tell you that there could be further monetary stimulus coming in, and that in turn has been supportive. Same has been the case with the silver as well. It's a 10-week highs for that one. $30 per ounce is holding for that one as well. And not just gold and silver which are making multi-month highs. It's with the other commodities as well. If you look at the NYMEX crude prices, it's holding around $98 a barrel. The crude prices now are up 9% for the month of August itself, and that's a 3-month high for that one as well. More than a percentage point of gain coming in for the base metals, especially copper, which is trading at a 1-month highs right now. So it basically is the stimulus hopes which are keeping most of these markets on the higher side today.
Okay, Manisha, many thanks as always for that snapshot on the commodity universe. Let's get you some trading ideas as well on that note. Kishore Narne from Anand Rathi Commodities joins in. Kishore, hi. First, let's start off with your view on gold, considering that's been running up high.
As far as trading opportunities are concerned, in gold, slightly the risk-reward ratio is not pretty favorable at this point of time. So I would suggest probably if people are trading short, one can use the dips towards around 30,500 or 480 kind of a levels to exit their short positions. I expect a short-term dip again in gold prices before the further rally. But maybe anything close to 30,400 one can re-enter on the long positions again if the sustainability is there with a very strict stop loss.
Right, Kishore, what about silver? What's your call on silver?
As far as silver is concerned, I think the rally, I feel that probably it is a little extended over its current fundamentals, and also the weaker Chinese data would be slightly negative for the base metal complex. So probably the outperformance of silver, which we have seen over the last 4 or 5 sessions, will be subsiding right now. So I would be suggesting to sell silver at around 56,600 to 700 kind of a levels, with stop losses above 57,500 for September contract. Again, a target of 55,600. Again, looking for a dip here because I feel that rally has a little extended from its own fundamentals at this point of time. On a medium term scale, probably we could use these dips towards around 55,600 kind of a levels to re-enter on the long positions in silver also.
Kishore, what about your views on base metals like copper?
I think it's a tight it's a walk on a tightrope right now. So probably we feel that copper has a slightly upside at this point of time. We will be looking to buy copper August at around 423 levels, with 420 as a stop loss and 430 as a target. But again, on a positional basis, I think our view still remains weaker, and we will be looking to sell maybe 430, 432 for November contract is a good selling levels on a medium term perspective.
Final call, Kishore Nani. What's your view on crude? Would you be looking to sell crude as well intraday?
What we would be suggesting is a contra trade because we are trading at a resistance. Probably one can sell crude at around 54.10 to 54.20 kind of a levels with a very small stop loss of 54.50, and look for targets close to 53.50 or 53.20. But if the Friday close comes above $98, 98.5 kind of a levels, then probably we are headed towards 6 to 7% up move in crude prices. So again, on a positional basis, there is a little lack of clarity at this point of time, but a weekly positive close would be a very good positional trade on long side in crude.
Okay, Kishore, good to have you on the show as always.